of course, with us. Kunal, how are you looking at, and we also have Arpit Beriwal, by the way. Arpit from Motilal Oswal joining us this afternoon. Good afternoon, gentlemen. Kunal, let me start with you. What's the take like with regard to the Nifty?
Yeah, yet another flat day for the index, but I think it's good to see that there is a tinge of green throughout the day, which the indices have maintained, both for the Nifty as well as for the Bank Nifty. The reason why I believe that today we're seeing some bit of selling pressure at higher levels or maybe a resistance of sorts is because there is some anticipatory call selling which is happening at 26,200, 26,300 strikes for the index, where there has been a slight jump in the open interest for both of these strikes. That's one of the major reasons why I would believe that the markets are trading a little bit on the softer side. But then we anticipated this in the morning that the volumes are going to be down for the indices because of the New Year effect. And I think in that sense, we may probably expect the markets to be a little bit more listless. It's only good to see that there are many individual stocks which are seeing follow through up move from the last couple of days of gain. So I think in that sense, we probably expect that the markets would regain or continue to gain up higher in terms of trends. Yes, the pace of the rally on the upside will be a little bit more slower than what we've seen earlier.
Okay, so that's the take on where the markets are headed. Arpit, hi, good afternoon. Let's talk about Blue Dart, a stock that's in focus. A very major tax easing off has been handed down to them, and that's the reason why the stock is also doing very well. In fact, in the first half of the day, we did see very healthy gains of about 7 to 8%, but Blue Dart is up over 3%. Arpit, how do some of these logistics players shape up on the charts for you? A Blue Dart, a delivery, anything looking good?
Very good afternoon to all, and wishing you a very happy new year to
Happy
the
New Year to
entire
you as well.
team. So talking about the overall stocks, such as if we see Blue Dart particularly, today we have seen a very sharp up move. But if I look at the bigger time frame chart on the weekly scale, so it's in the process of forming double bottom pattern on the weekly time frame near 5,500 levels. It has negated the formation of lower highs after 5 to 6 weeks. So looking at the setup wise, definitely the risk reward is favorable as it is turning from its major support zone from 5,500 levels. On the upside, 5,900 and 6,400 would be a key level to watch out for. So if someone wants to play a bounce back move towards 6,400 levels positioning, it's a very good risk reward available with keeping stop loss of 5,500. The stock can head towards 6,000 and 6,300 levels positioning.
Okay. Kunal, some of the auto counters in focus as a result of those auto sales numbers that are coming through. We'll quickly give you, the viewer, a quick gist of those numbers. But Kunal, while we're at it, Tata Motors CV has seen a bit of a spike, 3% higher on the back of those numbers. How is that one looking on charts?
Yeah, limited history, Harsh,
Yes.
for the stock, but then
Yes.
given the last 1 month broadly for the stock price, the patterns have been quite consistent. In fact, we've seen the stock actually making a consistent pattern of higher highs and higher lows, even though it's on a short-term time frame. But it tells you that the demand post the demerger for Tata Motors and specifically for the CV has been a little bit more on the higher side as compared to PV. So that I believe could be an interesting aspect to look out for. And in case if this trend extrapolates itself for say the next 3 odd months, 6 odd months, then we could be looking at this as a major divergent factor between Tata Motors CV and PV, where Tata Motors CV can continue to charge a lot more better premium as compared to the PV. So I think as of now, the near-term trends for Tata Motors CV is much more on the bullish side as compared to the passenger vehicles.
Okay, so that's the take on both of the Tata Motor stocks on the charts. But Kunal, amid a market like this, where we're absolutely range-bound and flat on the first trading day of the new year, where does the stock bias lie? What stocks are you liking at the point?
So I'll go with a couple of buy calls. Cummins India is something which I think is now trying to make a comeback. It's bounced off from one of the critical supports over the near-term charts. So would look out for a buy on Cummins for a near-term target of 4,600. Stop loss could be kept at 4,400. And the second is something which I've been recommending time and again over the last, I think, maybe few years. AB Capital, even at current terms of 360, it looks fairly strong, poised for a breakout on the higher side for AB Capital. Would look out for 370 as a near-term target, stop loss at 355.
The big movers today, Snehi, is some of your cigarette counters, tobacco stocks, and ITC and Godfrey Phillips are
Yes,
the two big
absolutely.
culprits. I think 10 to 15% shaved off those those counters.
Yeah.
Firstly, give us the view
Yeah.
with regard to
Yes.
what's happening there, and if any brokerages have given any views.
Absolutely. So bear with me. This is very detailed. Let's talk about it and let's break it down. First of all, understand the kind of move that we've seen on these names. ITC registered the biggest ever intraday loss since March 2020. The market cap has also slid below 5 lakh crore rupees since October of 2025. So sharp fall over there, 9% lower ITC. Godfrey Phillips, it's the biggest ever intraday decline ever seen for this stock when that stock was lower by about 18 to 19%. There's been a mild recovery on that stock, but nonetheless, this has happened as and when we've started to receive more clarity from the finance ministry today. The news is, and the prima facie reason why some of these stocks are under pressure is because the government has notified that February 1st is going to be the date from which the additional excise duty will be started to be levied on tobacco products and a fresh new cess on pan masala. But let's focus on tobacco and cigarettes for now. The new cess will be over and above the GST rate of 40% that was announced in September for the entire sin goods bracket, and this new cess is going to be replacing the compensation cess which is at play right now. So to understand what changes from the 1st of February is going to be a 40% GST on cigarettes and similar products, 18% on BDs. On top of this, a health and national security cess will also be levied on pan masala, and tobacco and related products will also now attract an additional excise duty. What is this duty? What is the quantum and how is it calculated? Let's understand. Right now, the existing excise duty on these names ranges anywhere between 2,050 rupees to roughly 3,500 rupees. That's the range right now. What changes going ahead is that the amount here goes from 2,050 to 8,500 rupees, depending on the tobacco content in the cigarette, the length of the cigarette. These are going to be some important metrics to watch out for. So anything that's under 6.5 centimeters in terms of cigarette length is 2,050 rupees per share, and as and when that length of the cigarette increases, it goes all the way up to 8,500 rupees. So that's the calculation as per which the government is going to start putting this excise duty on the cigarettes right now. And like Harsh was talking about, the brokerage reaction so far we have is from Jefferies, wherein they're saying that this is a much larger than expected hike in terms of excise duty on cigarette players, and they're saying that a calculation suggests that this tax could be as high as over 30% if you put these numbers into perspective. But their most important view is that if ITC wants to be able to withstand this shocker from the government, it's going to have to at least take a price hike of 15% and then effectively pass it on to the end consumer. That is going to be an important metric to watch out for, to what extent these cigarette companies announce price hikes, because at this point it seems like it's an inevitable thing to look forward to in the future.
Okay, Kunal, on charts?
See, I think ITC at current levels, we were discussing this in the morning when the stock opened gap down by, I think, 3 or 4 percentage points, and still I maintained and avoid on ITC because after such kind of a news flow, the stocks are bound to have some sort of an inertia effect on the downside. The concern for ITC on today's chart is the consistent selling the stock has seen throughout the trading session, which means that bounces into the stock into this kind of a pattern would be sold into. So. Would probably not want to look at the stock in terms of buying at current levels. Would just want to keep it on a radar as of now, wait and watch. Maybe on the downside, I would expect 350 or sub 350 levels to be tested for ITC in the near term.
Okay, Arpit, ITC, Godfrey Phillips, what's your view there on both of these in terms of charts?
If we talk about ITC first, we have seen a sharp fall, and this has been one of the steepest fall in last couple of years. Looking at the overall setup on the monthly time frame, the stock started rallying from around 330, 335 levels in the year 2022. And now thing is sense that the next major support would be around 340, 330 levels. So from a trading perspective, it's better to wait and watch for any major reversal. However, from looking at the investment perspective, if ITC corrects towards 320, 330 levels, that would be a good entry point from a medium term 1 to 2 years perspective, with keeping major support around 320 levels. Now, if we talk about Godfrey Phillips, so overall the stock has seen a very sharp fall in last couple of weeks, and today we have seen one of the steepest fall almost falling 13 to 14%, and the stock has already corrected decent from all life high territories. Look at the setup wise for Godfrey Philip. It's better to wait and watch on the current junction because on the weekly time frame it is forming lower as low structure and there is no major sign of reversal. So giving the choice, better to wait and watch. Avoid bottom fishing Godfrey Philip. However, for ITC, good level to entry point would be around 325 to 330 levels from a positional perspective.
Okay, so that's the take coming in on both Godfrey Phillips and ITC. On that note, we'll slip into yet another very short break and talk more about the markets on the other side. Back with closing trades. Last about 45 minutes left for the first trading session of 2026 to come to an end. But before the break, we were talking about where the stock bias lies on the technicals, at least amid a market that has been absolutely flat and range bound today. We did get some of Kunal's ideas. But Arpit, what about you? Where is the bias? In fact, where are you positive on the market right now?
If you see overall from last couple of weeks, the large caps are relatively outperforming, and we like to stick with the heavyweights bet in the large cap space. First pick would be Titan. So if you see a classical range breakout on the monthly time frame, we have seen in Titan above 3850 levels, and in last few days we have seen a good rally from 3900 to 4000 plus levels. Looking at the position setup, definitely we can see much more room upside towards 4200, 4300 positionally. So first pick would be Titan with keeping stop loss 3950 for an upside move towards 4300. Titan would be your first pick. Second would be from the another large cap space, from the capital goods space is L&T. So L&T has been consolidating from last couple of months, almost 12 to 15 months, and finally gave a range breakout above 3900 levels. Strong reversal from the lower levels, holding well above its short-term moving averages. The stock looks good for another 4 to 5% rally from here on. So one can go long with keeping stop loss of 4050 for an upside move towards 4300 position.
Okay, all right. So that's the view coming in with regard to the picks coming in from Arpit. Let's quickly also look at some of the movers in trade today. And within the auto pack, you have quite a few movers. I'm just going to quickly pull them out. There's a steel strip wheels, which is up 8.5% on the back of the numbers. By the way, we had Tamil Nadu Mercantile Bank, the numbers also come in. Again, the numbers look strong, 16% growth on the advances front. APL Apollo is the other one, 4% higher on the back of the numbers. Ashok Leyland has done well, 3% higher on the back of numbers. Again, Karur Vysya, provisional numbers coming out for that one as well. Again, good set, double-digit growth clocked, and around 2.5% higher on that counter as well. Escorts up around 2.7 odd percent. Some of the lenders, Arpit, Tamil Nadu Mercantile Bank, Karur Vysya, are just some of the banks which are likely to be in focus today as we run to the close over the next 40 odd minutes. The view there on these two?
Outperforming, whereas we have seen the banking space, the privates are underperforming. The mid cap, the likes of Fed Bank, AU Small Finance, Karur Vyasa, City Union Bank. So particularly if we talk about Karur Vyasa Bank, the stock is in clean uptrend. It gave a monthly breakout a couple of months back, and since then we have seen a very strong rally. So another classical range breakout above 255, 260 levels, Poland flag breakout. The stock is at life high territory, forming high rise, high low structure. So from here on also, we can expect good 8 to 10% rally towards 285 to 90 levels positionally, with major support around 255. So it would be a kind of a buy and dips counter with a time frame of 1 to 2 months. Definitely the stock can head towards 285 to 300 plus levels positionally.
Okay, so that's the take on Karur Vysya Bank. Kunal, your take on some of the big losers from the Nifty 500 group of stocks today. Something like a Deepak Fertilizers is lower by 3.5%. Now, the fertilizer pack and chemicals also overall in the last 2-3 days have been quite volatile. What is your reading on the charts?
Yeah, I think they have been volatile, but then the near to medium term charts for these stocks are still going through a recovery of sorts. We were looking at Chamal Fertilizers, for example, one of the prominent names, which has corrected almost 40% from its 2024 highs. You look at RCF, even that stock has gone through a decent correction. So it looks like that many of these fertilizer names are just about trying to pick up pace, form a near to medium term bottom for themselves, and the recovery would probably come back into these stocks. But you might not expect that these are the names which should probably be the strongest performer going into the market, where even the markets are seeing very sluggish kind of momentum, very slow, steady, gradual momentum for itself. So I think in that context, you might have to be ready for those days where one-off days the stock climbs up 3, 4, 5 percentage points, and then subsequently for the next 5 or 7 trading session, the stocks actually remain a lot more sideways where the momentum drops down significantly. So I think that's going to be the trading style which one has to adopt for these kind of individual sectors.
Okay, so that's the take on the chemical space. Just taking a look at some sectoral moves that we're seeing today. And of course, you know, it's auto that's done very well. We've got select auto sales numbers that have done well. It's Ashok Leyland, TVS Motors, Bajaj Auto, M&M. All of them are seeing very healthy gains. In fact, Ashok Leyland is higher by about 3%. We'll be getting Shrishti on board in a bit from now to decode all of these numbers for us. But before that, Kunal, in fact, let's get a view from Arpit. Arpit, you're reading on Ashok Leyland on the charts. Very sharp spike of 3%. Now, two questions. For someone who holds Ashok Leyland, should they continue to hold, or is this spike looking attractive to maybe book partial profit? And secondly, for someone who's willing to enter this stock right now, is looking forward to do that, is now a good level?
Been
Arpit,
uptrend
yes.
within the auto pack. It has been a huge outperformer. And look at the setup wise, the stock is seeing good rally from 140 to 185 levels. So in terms of the target wise, our first target was around 180, 85 levels that we have recommended long back also. So I think the person who's holding this position, it's better to book profits at this levels in the range of 185 to 195 levels, because that was the Poland flag target around 190, 195 levels. Second question, if someone is planning to buy fresh, it's better advisable to buy on dip counter, because overall the stock has already seen a good rally of 20-25%. So the risk reward will not be favorable at current junction. A good entry point would be around 170 to 175 band. That would be a good entry point. With keeping stop loss of 150, the stock eventually can head towards 200, 220 plus with next to 2 to 3 months time frame in mind.
Okay. And Kunal, what about Ola Electric? A 4% uptick on the back of the auto sales numbers that we have seen. A good time to look at the stock, or perhaps avoid?
I think it's an avoid
Okay.
play because there are far better names which are available in terms of solidity in terms of a portfolio. See, one-off days you might have these entertaining stocks. They would do very well for themselves. But then largely, if you're looking to play trend, if you're looking to hold stocks on long term, you need stocks which have absolute strong clarity as such in terms of the basic news flow events surrounding the stock price. You don't want to be left out with a stock where in a matter of 1 or 3 months there is a sudden news flow and the stock gets into a corrective phase very sharply. So that's one of the major reasons why I would believe that Ola right now is an event driven stock. So if it comes into the favor into the stock price, you might have one of days where the stock price moves up higher. But then if that's on the negative side, it doesn't mean that the stock consolidates, but it goes into a U-turn and the stock falls very sharply. In that context, I'll suggest an avoid on Ola. But then, if you discuss on the two-wheeler names, there are far better stocks which are available. Look at Bajaj Auto. The stock just seems to have come back into its own in terms of the breakout of a 9,300, 400 mark. Hero MotoCorp, that's a stock which is looking extremely strong in terms of risk reward, placed at 5,600, 700 plus mark where it's trading right now. So, and Eicher Motors, I think that stock has been to a different orbit altogether, has been one of the prominent leaders in the auto pack two-wheelers. So, I would probably sense that there are far better names, more stronger quality stocks which are available in the two-wheeler packs, and I think that's where I would probably want to prefer.
Okay, so that's an interesting take coming in on how to avoid Ola Electric on the charts, but rather focus on names like Bajaj Auto and some other two-wheeler names in the market right now. But on that note, time for another very short break. We'll be right back to track the last lap of the market on the other side.
Joshi joining us, Head Equity at MarketSMITH India. Mayuresh, firstly wishing you a very, very happy 2026. What are you buying?
Afternoon, Harsh. Wishing you, the entire team at ET Now and all your viewers a very healthy, peaceful and a prosperous 2026. So largely, I think after the performance of the broader markets, which have been a tad bit disappointing for 2025, our take is the markets might actually show a rebound based on the earnings trajectory, that a large part of the markets might actually start recouping in the next few quarters. Q2 has been relatively resilient, and therefore Q3 numbers will be keenly watched out for. Apparent signs of turnaround if seen in Q3 and the second half would lay base for a 12 to 14% consensus earnings growth, which is getting played out uh, by most analysts exit 27. And therefore, I think select sectors, select stocks might actually continue doing well. So some of the themes which are probably looking on our sector rotation graph at Pandre at MarketSMITH India, the software that we closely track, a lot of thematic indices. Consumer discretionary is coming back very, very strongly. Select BFSI is looking durable in terms of earnings recovery, and a few infra stocks. So I think a few stocks which are trading close to the pivot levels as we speak in MarketSmith India's model portfolio includes the likes of Vishal Megamart as an example, which is a proxy to consumer discretionary highs. Our own sense is that based on Q2 numbers, where EBITDA margin in the first half have shown a significant amount of improvement to 9.4, 9.5%. Sales have shown a 12% increase. Our take is with consumption expected to come back strongly, specifically post the GST rationalization moves, and the kind of mix that Vishal Mega Mart has in terms of apparel, FMCG, other FMCG as well. I think that looks strongly placed. Financials, I think we've always been propagating Shriram Finance from the NBFC universe, and a disclaimer, we hold this stock in our global portfolios. But PSU Bank selectively might still continue doing well. Bank of Maharashtra becomes an example which we hold in our domestic and global portfolios as well. Our sense is that the cost to income ratios are dwindling lower. Asset quality pressures are dwindling lower every passing quarter. Provisioning is well provided for, with the PCR standing at 98 odd percent. We're probably looking at tier 1 ratios, which are very, very strong at 14%, which makes us believe that if the run rate probably continues in terms of earnings delivery, the expectations that you probably have in terms of better ROAs, ROEs should continue. Auto Anks as a space should selectively continue doing well, and within that, Uno Minda is something that continue liking in terms of ratings and rankings that we've got at MarketSmith India. Integrated facilities, content per car expected to go threefold over the next few years. They've got platforms that are adopting and creating platforms which are EV agnostic as well. So I think it's a good mix in terms of ICE engines that it provides at this current juncture, and EV platforms and systems going forward as well, with the content per car might actually double or triple over the next few quarters and years. So no Minda is something that we continue liking. So selective on a few sectors which are looking good as per our thematic sector rotation.
Sounds good over there, Mayuresh. Good afternoon and Happy New Year to you. Very good performances coming in this time around, and like Shishti was mentioning, either in line or much better than expected performance is what we've seen. Kunal, your take on some of the four-wheeler names. We didn't speak about the two-wheeler names, but what about something like a Maruti Suzuki versus an M&M? Does this change the way how those two stack up on the charts against each other?
Well, absolutely, yes. In fact, I would probably believe that Maruti is a far more stronger stock right now as compared to M&M, purely in terms of relative strength. You know, the way the stock has managed to move in the last 3-4 months, specifically from the August point. You know, Maruti was a stock which was at 1100, sorry, 11,000. And from 11,000, 11,500 levels, the stock has already, given 50% kind of returns in this kind of a time span. Now, we try and compare this with the likes of M&M in the last 4-5 months. That stock, even though yes, M&M has given positive returns on the higher side of, I think, the tune of 15 odd percent, but then it's far underperformed the immediate peer Maruti in that sense. More importantly, when we look at the charts, the tendency of the stock price to go into a correction and then to try and make a bounce back, Maruti has scored very very well in that degree also. So that, I believe, is a very strong quality and feature for a stock price for Maruti. Would be bullish on the stock in the near term and expecting the stock to be one of the stronger leaders emerging from the entire auto pack.
Okay, so that looks good, and that's the take on some of the four-wheeler names. Just shifting focus, and let's talk about some of the stocks that have done well other than the newsmakers today, purely on the back of volumes or some other news flow. You have PNB Housing that's up about 4%, looking very good over there, as is the case with the JSW Energy up 4%. Arpit, your take on some of these names on the charts, and how are names like these shaping up?
If we first talk about PNB Housing, so the stock has definitely seen a good recovery from the low levels. The stock has almost seen a rally from 820 to almost 950 levels in last couple of weeks time frame. So with the setup wise, definitely the stock can head towards 1040, 1050 levels as this the entire space is in flavor with a major support around 950. The stock can head towards 1040, 1060 levels. Now talk about JSW Steel. So definitely the metal pack has been an outperformer from last couple of weeks, and we have seen a tremendous rally in the metal stocks. Particularly JSW Steel has just joined the party last couple of days back. And if you look at the setup wise, the stock has formed a strong base near 1120 levels. Yesterday we've seen a gap up opening. Today we have seen follow up buying, and definitely look at the overall metal index. The index is likely to outperform, and stock being the huge large cap within this space. So I think the stock can head back to its previous all-time high around 1220, 1250 levels. And positionally also the stock can head towards 1300 plus levels. So JSW Steel, the chart wise is quite strong with support around 1120 for an upside move towards 1240 and then positionally 1300 plus zones.
Okay, so that's on PNB Housing and JSW Steel on the charts and how.
Back to auto. You suggested that you're playing auto likely through Uno Minda, and that's probably one way of playing it. Auto Ank. Is there a particular tilt you have in terms of a preference? PV, CV, two-wheeler, and Uno Minda? Any specific reason why? Could you give us the gist?
Harsh, I think the new plant is probably opening up for them. So they've already got integrated facilities that they are carrying on. The EV penetration for four-wheelers has touched 5% for the industry as a whole. 9% for two-wheelers. They've crossed the 1 million mark in FY25. So it should be relatively higher going forward. And therefore, I think the kind of components or content that Uno Minda is probably making at this juncture, whether it's airbags, whether it's seating, acoustics, lighting, I think they are all products which will probably go into the EV ecosystem. Specifically when it comes to two-wheelers or four-wheelers in particular. And therefore, I think as this ecosystem develops, I think they have got ready products in terms of the EV value chain. And therefore, I think they will be future ready with the products that they've probably got. Let's not forget, as I mentioned in my remarks, that the ICE products will still continue. And therefore, I think a large part of their basket with the modifications that they're probably doing and the tilt towards the EV ecosystem, the content per car generally as a benchmark should go up 3 times. So I think around 12 to 15,000 per car. It should probably move up in the higher range of 35 to 40 or thousand. Even if it doubles, as an example, on a base case scenario over the next year and a half or 2 years, you'll see a significant jump happening in terms of the top line number. And with integrated facilities, the margin should show gradual uptick. So I think that's the operating leverage we're trying to play through in terms of a few auto hikes.
Okay, so auto anchors are looking good. Talk to us about what is the view on some of the tire stocks because Mayuresh, the auto sales numbers have looked very good. So I'm assuming the quarter gone by for the tire stocks could have also done well because we've seen a good move coming in on someone like an Apollo Tires, Seat. What is your take on how that quarter gone by could have shaped up for some of the tire names?
So again, 2 things. One, I think in terms of the OEMs doing well will probably mean that the tire companies will also probably do well. And tire companies will do well on both counts. With OEM expected to be faring relatively better in terms of the sales numbers and the volumes that they are exhibiting. I think that is one clear indicator where their sales sustainability should continue. On the other hand, the replacement market, which has been a key market for tire companies, and where pricing probably remains largely in their favor with better margins, I think that remains relatively strong as well. Now, if you combine these two factors put together and if you probably look at the entire ecosystem, whether it's PVs, two-wheelers, and where CVs were probably lagging, the CV ecosystem is now picking up, whether you're talking about MHCVs or LCVs as a last mile advantage. And therefore, with CVs picking up, I think the entire gamut that tire companies probably have to present themselves continue on a strong footing. At the same time, input costs have remained relatively benign, and that aids them significantly in terms of margins going forward. To break up the tire stocks, I think something like a JK Tire and an Apollo Tire seem to have very strong ratings and rankings as we've seen in MarketSMITH India. Again, a large part of their portion in terms of the revenue mix comes in from the replacement market. For JK Tire, again, a large part of their product mix comes through the CV players itself, followed by the PV ecosystem and the two-wheelers. And obviously, I think they've got to play in terms terms of both the OEM and the replacement market. For Apollo Tyres, again, I think they've got an international operation in place, which should do relatively better as we head into the next 2 years. And therefore, these factors can be enablers in terms of earnings remain relatively stronger. So I think anybody holding a stock like JK Apollo and the innovations that they're probably doing in terms of the EV ecosystem as well, introducing those tires, green tires as well, I think all that might actually work in favor of them as we head into Q3 and the numbers there.
The other big buzzer today is Ajanta Pharma, and it's done ever so well. In fact, if I pull up the 1 month chart as well, it's likely done very, very well for itself. Arpit, do you have a view with regard to this one?
If you see overall, the pharma space has been relatively in a sluggish to consolidated way, but selective pockets are still outperforming. So if you look at the chart structure of Ajanta Pharma, after a very long time, it has given a consolidation break on the weekly scale after almost 3 to 4 months with good volumes, a strong bullish candle. So I think definitely the stock can have seen some more room towards 3,000, 3,100 levels. So with the setup wise, definitely the stock can head towards 3,000, 3,100 levels with major support around 2,850. The stock can head towards 3,100 positionally in next couple of weeks time.
You give us a view with regard. Okay, firstly, Arpit, thank you so much. We'll let you go on that note. I hope you have a very, very happy and prosperous 2026. So let me first close that conversation out. Okay, Kunal, let's come to you with regard to a Blue Dart. Now, plenty of movement on that stock chart of Blue Dart for today. Give us your take with regard to some of the other logistics players and anything that you like within that space.
Yeah, I think the few names which I do recollect from that particular space, other than Blue Dart, has been Aegis Logistics. That's a stock which I think on the longer term basis has been doing reasonably well. Blue Dart specifically after today's news flow, I was actually looking at the longer term charts, for Blue Dart, and I think over the last 1 year, the stock has seen a major correction of sorts. We've actually seen the stock falling very sharply in the first half of 2025. And then for the last 4 5 months, we actually saw the stock going into a consolidation as such. Now, what this move for Blue Dart could do is this it could end this phase of consolidation for the stock price. We've generally seen that stock price, they generally tend to bottom out a phase of consolidation when there is some sort of an event or news flow driven to the stock. For Blue Dart, that event has played out today, and I think that would be one of the key reasons why I would believe from a positional play the stock would start to look attractive. The only catch with stock like Blue Dart is in many phases when the stock goes into a correction or sideways, the volume drops down significantly. So it tends to become a little bit more illiquid in terms of the key parameters and volumes.
Okay, so that's the take on Blue Dart and Aegis Logistics that Kunal is liking at the moment on the charts. Mayuresh, what is your take on the Alco-bev space? Today, some of the top FMCG losers are United Spirits, almost a 3% cut over there. UBL, Radico are also seeing some profit taking today. What is your sense on this entire sector and which stocks would you like from this basket?
No, so I think we owned Radico, but as a clear disclaimer, I think we booked out just a few days back. Had a good run and a good return out of that stock. Our sense is that the kind of volume growth that you're probably seeing, it's penciling in the kind of entire premiumization story that we now see. Now, they've already reached a peak premiumization level. Now, to expect them to probably have premiumization levels to go up far higher from the current levels, they'll need to maintain that mix, is our opinion. I think between the premium products and the go-to market or the economy products, because I think that is where a large part of their overall volume sales comes from, where premium will give them better margins. However, I think as a mix of both of them, I think almost the peak capacity or the peak percentage in terms of premium is there. It might be another 400, 500 odd bips that might actually happen over the next few years. They introduce more products like a United Spirits or already in them. So there are good stories at the end of the day. But somewhere our sense is that the entire premiumization story might get capped off in terms of the percentage contribution to revenues. And if that probably happens, if one really expects margins to multiply from the current levels, that probably seems a little bit circumspect. So our own sense is that good stories, input costs have also gone lower. Molasses, glass prices are benign as we speak. But if this gets capped off, I think the valuation cap off will probably happen. Then the re-rating will come through better numbers delivery, which in our opinion might take some amount of time.
Kunal, what do you make of the move on transformers and rectifiers India? I don't know if you track the stock closely, but from the bottom it's up nearly 5%. and the move looks quite solid. So trying to get a sense as to how you're seeing this on charts.
Harsh, I don't track it, so I'll skip this one.
Okay.
Apologies.
Mayuresh, with regard to the power space and the power ancillary space, would you play through the transformers?
I think a large part of the move, Harsh, has happened. I think look at the
Right.
stellar move in terms of price action, right? And the valuations have probably peaked off. Again, I think in terms of core numbers, I think the market itself, the transmission market is expected to double or triple from the current level with expansion happening in renewable capacities, thermal capacities getting added as well. And therefore, there is a huge amount of outlay that is going to happen towards these sectors as well. Transformers will be the need of the hour. So ultimately, I think there is going to be growth happening here. But somewhere I think there is some element of discomfort that probably happens in terms of risk reward. One stock that we are probably watching out for is Power Mech, because I think it's a good combination in terms of how they're servicing the entire EPC ecosystem as far as power is concerned, as well as the O&M contracts that they probably win. So I think if they win through a large part of the O&M contracts, I think the kind of servicing contracts also comes along with the package that they probably get. And therefore, I think earnings delivery expected to be relatively better. If one really builds up this entire power narrative, which is expected to happen and is going to happen, I think Power Mech is one stock that might do well. But yes, Transformers as a theme will continue posting reasonable numbers, but there is a valuation discount.
Okay, and Mayuresh, what is your take on ITC in particular today, the kind of drawback that we've seen on that stock right now, about 9% lower? Does it make for a good case to now perhaps buy that stock for someone who's been waiting for a good point to enter, purely on the fundamentals, given that we have so much happening on that excise duty front today? Would you be a buyer in this stock?
No, I think we've maintained a neutral view for a long periodicity of time. I think the kind of cuts that you're seeing on the stock because of the excise duty, I think ultimately at the end of the day, let's see how numbers will play out, because the cigarette market is a highly demand inelastic market. And therefore, I think if the numbers go down on an absolute basis because of the price increases, it probably gets compensated. To a large extent, we've seen this in the past as well, that it does not create a major dent in terms of cigarette volumes. Obviously, I think cigarette cash flows are the cash cows as far as ITC is concerned. But my other concern for ITC is that they are probably investing a large part of their cash flows into newer businesses. And as this transition happens, as we've seen in the past, when ITC was pouring into the other FMCG business, you will see longer periodicities of numbers delivery, which will remain a little bit stagnant. And therefore, my own sense is that this stock might actually consolidate for both these reasons put together. The first reason, the markets will take it in its stride. The second reason, reinvestment in other products, other categories, will mean some element of ROC deterioration, which might just play out negatively in terms of reported numbers.
Okay, let's switch focus.
Conversation with companies also yielded. But Mayuresh, quick take on some of the quick commerce, quick food delivery players. Eternal is doing very well today. Swiggy is also has been doing decently well for itself. But yes, it's been seen a little bit of a consolidation. But now that Zepto is going to be listing this year, or perhaps they filed that confidential IPO, what is your take on how the quick commerce space could pan out once there's a third listed player there?
So obviously, that's playing on the price. That's one. Second, I think in terms of the expansionary mode that they started a couple of quarters back, 3 quarters to be precise, in terms of their dark store expansions, that obviously had a implied effect in terms of margins, specifically in terms of their food delivery business as well as the quick commerce business as well. And therefore, I think the expectations in terms of volumes remaining stronger for the industry as a whole will continue. I think there is a huge incremental demand that has now seeped in, specifically in the urban mindset, which probably means that the volumes will continue. It's about the margin profile and the bottom line growth, which ultimately will drive numbers and the EPS ratings and rankings as we see it. Obviously, I think what we are hearing in terms of the unlisted players as well, what Amazon is expected to launch, what DMart is doing in select circles, or what Reliance Retail might do, and how they will back up their entire ecosystem with a huge players, with huge players like Amazon and Reliance Retail, if they do decide to enter. I think then that will have a very interesting take in terms of how pricing for the industry will play out. So our own sense is that it's a wait and watch. Q3 numbers will be very, very interesting for both Eternal and Swiggy.
Okay, on charts, Kunal?
Yeah, I believe both these stocks, Eternal as well as Swiggy, they look fairly attractive to me on the charts. In fact, I've been making this point last day or a couple of days back also that 275-ish kind of a zone for Eternal, I think is a good zone where the stock could see a bounce back. The indicators, Harsh, after this 20 odd percent correction for Eternal, I think has come back into a deep oversold territory for the stock, and you're bound to see a bounce back over here. My expectation is that from a near term angle, I would look at 295 to 300ish kind of a target for Eternal. That's why I would believe that short-term traders may try to book some bit of profits over here in case if traders probably have bought the stock at lower levels.
Okay, Kunal Mahesh, thank you so much for joining us this afternoon. We'll let you go on that note. And it's Ashesha with the market wrap on 1st January 2026. Ashesha, how was the market? Sum it up for us.
Well, yes, we've barely seen any action on the index level. Nifty ending absolutely flat.